Thanks so much for tuning into the Trade Setup with me, Niraj Shah. Did you know that in 2024, SMID promoters raised money at more than one company a day? 384 mid and small cap companies in 2024 raised money amidst 20 to 24% index gains. This is as per an Equitas newsletter. More than 257 companies, or 257 working days, 384 companies raising money. That's the quantum of capital raise that happened in India. Anyways, let's take stock of what the world markets are up to and what the news flow is. Donald Trump is reportedly going to start the Russia-Ukraine peace talks in Saudi Arabia. Oil has edged lower as potential Ukraine peace deal eases the supply worries for sure. Couple of dollars lower is oil. US Treasury yields are headed lower too, or have headed lower, are below the 4.5% mark, a bit of an uptick. The only problem is that deep-seek revival from an Indian market perspective has meant that a lot of flows have gone to China at the expense of a lot of countries, including India. So bear that in mind. Nevertheless, US markets, mixed bag on Friday's session. The futures currently flattish. Asia, cautious start today and not untoward really. That is what you would probably expect as well. And our markets too should have a flattish start as of at the open really. Nothing too dramatic expected. So what's the trade setup for the day looking like? There will be caution across the world, and as a result of which, the global flows which will continue to impact sentiment and outflows, really out here. The support level, January lows, 22,830 is the key support in the very short term for the Nifty. So you have to bear that in mind. And from the medium term, of course, on the lower side, it's 22,400 or thereabouts. But the good part is that the percentage of stocks above the 40-week EMA in mid-teens now. This is the last seen in COVID. So therefore, the number of stocks here in this bucket have come off, and very few stocks trading above this key level, which just shows the sentiment in the market. This is very, very low. It was last seen in COVID, and from here, maybe, just maybe, upsides might actually give you better chances of a recovery as well. In fact, think of it this way. The bond equity yield gap, the 10-year GSEC yield at 7.05, Nifty earnings yield 5.67. The gap has narrowed to 138 basis points. Usually, the long-term average is 145 basis points. It is lower than 145 as well. From here on, if you invest, typically you will make money. I don't know if I'm sounding too bullish right now, but I think these are levels from where it merits to be constructive. Nevertheless, let's take stock of the stocks that you should focus on in the session today. We have very little time, so we'll just breeze through these. Keep in mind, it's a good time to nibble, pick and choose really. BHEL, big order win yet again, 6,700 crore. This is in addition to two order wins in the last fortnight. Certainly in the thick of things is BHEL. What else in terms of news flow? Alembic Pharma has gotten the US FDA inspection report from Jarod plant, classified as VIA positive. Glenmark, not so positive. 483 with 5 key observations for MP facility, very likely should have a negative reaction. Mahindra & Mahindra, 30,000 EVs booked on the day of launch. 2024 saw 1 lakh EVs all over India. M&M has launched 30,000 EVs or booked 30,000 EVs on the first day of its launch. Quite stunning, really. Let's see if the stock reacts positively. What else? A couple of brokerage notes. Nomura is on Afcons, initiated buy, target of 561. The current price is 424. They believe very strong earnings CAGR for Afcons. And the other one is, I think, HSBC and SBI cards, if I'm not wrong. So that's the second one. Upgrade to a buy from reduce, have hiked the target price to 1,000. They believe a lower revenue or lower rate scenario works well for this one. And the credit cost drop will drive sharp EPS upgrades according to HSBC. So watch out for this one. Then some key stocks. And I'll just mark 3 or 4 viewers because we only have that much time. But one of them is Sudarshan Chemicals. Revenues were up 17%. Margins, very quickly, should come up on your screen, 11.8 versus 10.9, as a result of which profit after tax went up as well, though there is a bit of 0.5 versus 14 crores because there was a one-time expense of 30 crores when it came to Sudarshan Chemical. And otherwise, the PAT also would have been higher. So good results, should do well, Sudarshan Chemicals. Polyplex is the other one, very good results, revenues up 15%, margins expanded, bottom line expanded, again, could do well today. And Uflex too, as a result of this thing, since we are talking about the same vein, Uflex, revenues are up 12.8%, margins did okay, bottom line numbers looked okay as well. So let's wait and watch if both of these react or no. And the last stock, we should get the next one up, the last stock on the list today, GSK Pharma, revenues up 18%, margins did okay, and the bottom line number as a result of which did really well too. 230 crores versus 46, the estimates were 197 crores. I'm afraid we'll have to cut it at that. There are a few other stocks which came out with bad numbers as well, right? But PTC Industries and a few others. But net, the point is the scenario is skewed towards the upside, so watch out for that. Thanks so much for tuning in to today's Trade Setup.